And that sound means we are live on YouTube. This is Tackle Trading's Halftime Report. We've got Cody, we've got Mark, and we've got myself, Coach Tim, here. Day after the Fed announcement, the Fed came out easing monetary policy. We've got stuff going on in oil markets today as well. Volatility across the board, and the market is backfilling. But first off, Cody, how you doing today?
I'm doing fantastic.
And my brother Mark, how are you, sir?
I do not respond to pleasantries.
You do not respond to threats, which is, I guess what a pleasantry is to you. Nothing wrong with that. We're going to have some fun no matter what. Cody, go ahead and bring your screen up. Let's rock and roll through the markets.
I'm just happy I'm not here on freaking Fun Friday or whatever the hell you call it.
It's Terrific Thursday, Mark, is what we're going to have today. Oh, we're up at a high point.
Timmy doesn't make me laugh all the time, but he made me laugh there.
There you go. V-shaped recovery through May and June, Mark. Now we've got easing monetary policy. The market gapped out at the open, but we're now not holding on to those gains quite yet. First off, just big picture.
Recoveries this year.
Yeah.
What has been people make trading more difficult than it needs to be in today's day and age. What has been the pinnacle, the source, the catalyst, whatever you want to call it, for that both V-shaped recoveries?
Well, Fed monetary policy, yeah.
And it's that simple.
Yeah.
You hear us at Tackle Trading all the time say, don't fight the Fed. Maybe traders should not only not fight the Fed, but maybe when they shift policy, they should start, taking some trades based off it, But here's when those V-shapes cover, when the Fed do that, the market's been down in previous weeks. And so people are scared and they're hesitant. And it's just, we make this a lot more, people make this harder than it needs to be sometimes.
I think so. The trade war news turned the market over there in May, and now the Federal Reserve responding to it has turned the market back up to the high side. We've been talking about reversals, and you got to respect it when the market was selling. Obviously, in May, we had moved our postures more to neutral to reflect the risk from the trade war. But now that we're back above moving averages and we're showing bullishness, the market has a +1 posture right here. Now, it may or may not close at the all-time high today, Mark, but we did hit an intraday all-time high at 2964. That's a new print for the S&P 500. Is that noteworthy at all to you?
No, I'm doing things different these days than I'm getting back to my roots. I don't trust buying at the highs. I'm a buy the dip right now. I'm a buy the dip kind of guy. Like what I love to see right now, whether it's oil, whether it's gold, whether it's other markets, whether it's equities, is I feel comfortable with dips. I don't like rallies. It's just the chances of surprise news to the downside still remains high. Now, what the Fed does for me, and I'm only speaking for me, what the Fed does is that when those dips occur, it gives me great confidence to start adding up.
Yeah.
I don't mind dabbling a little bit at any point here because, once again, the Fed has my back. The Fed has my back.
Back out to a weekly chart, if you will, Cody, and let's take a look at the big picture. Multiple time frame analysis just on the broad market is a very important thing to do. What a weird chart, Mark. And obviously, when you trade, you live that day by day by day by day. And Matt was asking me, he was on a plane to Philadelphia, and he's out there teaching for legacy education this week. And he was asking me, he says, Tim, what do you think the most likely scenario is post-Fed? I said, it's the same scenario that we've had for the last couple of years. It'll melt up higher until something bad happens, and then it will rapidly sell off, and it will continue to do that until the game changes. It seems like the playbook right now, Mark. The economic playbook they have. I
don't disagree with that at all.
And sometimes those bad events, the market's turning over, you don't really know what it is. Early in 2018, it was the trade war. Late in 2018, it was interest rate policies rising when Jerome Powell came out and started to talk about rising interest rates. But now we are in upward drift. We're now at a new high point. I don't know if it's going to hold it. Very, very interesting pattern. In fact, maybe even an inverted head and shoulder here. You have that dip right there, rally, deep V-shaped recovery, rally, new shoulder on the right side here, and now we're breaking into new highs. Call it like you see it, buy high, sell higher. It's the nature of the market. Go down to an intraday chart, if you will, Cody, and let's take a look Yeah, you range up. It's funny how on charting you can always draw a line to make you confirm what you think, you know. C'est la vie. Down to a 5-minute or an hourly chart, either one of those would be fine for me.
I'm going to go 15-minute.
15 works for me. Anything on the intraday. You know, we rallied overnight, Mark. In fact, the market was just up from yesterday's close all the way till the opening print here this morning. A lot of different reasons, but right after the opening bell, probably about 15, 20 minutes into trading, we started to sell off all the way back down into this backfill. Do you see this as a retracement on the intraday? How are you approaching the end of the day here?
Listen, back up a little bit. Like if you want day trading 101 lessons here, I mean, just look at this week's action. Go back a little bit. Go back a little bit in time. Like there are just a couple basic signals. If you just bought when it broke intraday resistance levels that had formed that were, solid, those were easy trades. If you then sold once it dipped below the 20 moving average on the 15-minute chart, those were good take your profit signals. Price action this week has been technical analysis day trading 101. When you get those multiple day resistance levels form by the breakouts, take those quick profits when it exits, falls below the 20 period moving average on the 15-minute chart, and then get back in if it breaks resistance and forms those nice resistance levels again. Very, very easy chart to trade. I mean, just that last resistance level.
Yeah.
Yesterday. I mean, it's not something for individuals that aren't willing to day trade or swing trade on really, really short time trade frames, but there's a lot of easy, quick money.
Have you traded that new mini futures contract yet?
No, I have not.
Check out MES here, Cody, /MES. It's really interesting. Basically 1/10 of the size. And I had not traded it yet, but I was looking at it. Obviously, it's going to be liquid here. The spread mark is the exact same as the S&P. So per tick, it's a quarter tick. But instead of $50 per point, it's $5 per point.
And that will access the ability to day trade. For people that, because listen, if you've ever traded futures, whether it's crude oil or E-minis, that stuff can move and it can rattle you. But go trade gold the micro version of gold. It's not as rattling. It's something that you can do a lot easier. And so, especially if you're getting used to futures, it's a good way to start.
Yeah, I agree with that. In fact, here, Cody, I believe you've got, your real-time data. We're not going to trade this one right here. But the reality is the MES contract, Mark, to trade the regular futures contract on the ES, I think you probably need like 25, 50 grand in your account or higher because of the nature of the per pip risk or the per dollar risk, I should say. But the MES contract, it now opens up that futures trading on the S&P for traders that are, say, less than 20K in their accounts. With a 10 or 15K account, I think you could trade one contract here. ATR, what's the ATR on the daily for the S&P, Cody? I think it's a really cool product. I'm really excited about it. There's also NASDAQ and some other minis that they've got created. The per $32 ATR at $5, that's $150 up or down in a day if you had a 1 ATR move, Mark. So that kind of opens the door for a lot of traders in the futures market. Just a quick note there. Let's go through some of the charts in the S&P that are grabbing my attention. Let's first start with just performance here. All of the big names in oil are kind of moving to the high side. We will get to crude oil here in just a minute. On the heat map, though, I got to start with Oracle, ORCL, if you will, Cody. Application software companies, they've been stuck in a range here for a bit, Mark. In fact, CRM and some of the others, they're all neutral. Oracle just gapped out on earnings, and it's actually holding that gap if you look at it. Oracle here, and it's about a 7% move, a little higher than what was expected and bigger than the gaps in the past. Just without knowing the earnings data, just reading the chart itself, that's pretty bullish in my opinion if it holds the breakout point. What's your read, Mark?
Yeah, I mean, these type of gap ups, traders like these type of gap ups where you had a resistance level that's easy to identify, which you can at around $55. You have a little gap up. Usually takes several days for a great pattern to form, but a little high basing situation, a little pullback where you see some consistency. Traders Experienced traders generally like this pattern quite a bit. Not on the day of, but in the formation of a nice trading signal over the next couple days.
Mm-hmm.
I completely agree with Mark. That's exactly where my eyes was to 55.
You need to say that more often, Cody. Get used to saying it a lot. I completely agree. I like how you say that.
And then I immediately afterwards want to go to intraday and see, like, okay, was that wick to the upside, was it all in one short time frame, or was it gradual? So now I see it's gradual. So this tells me that it might be more likely over the next couple of days to get a high base rather than a pullback. If I would have seen a big spike to beginning and then it came back, within 30 minutes or so, I'm like, okay, it's probably going to pull back. But regardless of what it does, if it comes to 55, gives me a doji, moves to the upside, awesome. Trigger and trade it. If it makes a high base, where we get some clear resistance lines, whether that's outside this wick or even, maybe lower, then wait for the trigger and trade it.
Many of the other charts that are top performers in the market, Noble Energy, Diamond Offshore, National Oil Well, Varco, Halliburton. In fact, why don't we just bring up the Halliburton chart, HAL. Here's a candidate, Mark, I had as a bearish watch list candidate waiting for it to break down, but you can't trade without confirmation. Oil's going back up. These oil companies are going back up. Little reversal signals here, but the trend now is violated. As you're looking across oil companies here, does this break a lot of what those patterns were setting up for you?
No. Oil is sometimes a tricky thing to trade from a technical perspective. I only really trade. Now, I'll use technical signals when they're really, really beautiful and they're clear, but I do not let technical signals trump my fundamental analysis of oil at any given time. So, it makes, like when I did an extensive moving average study, guess which broad area of the market had the most violations in my moving average study?
Well, since we're talking oil, I will guess oil.
See, Cody, I take back everything. See, that is a smart answer and an easy answer, but it's true because the commodity markets are fascinating. That is where I have gravitated more and more to, as tackle trading has added more coaches and the coaches are active, and we've added great little coaches like Slavic, who students love, by the way. Slavic, hope to get him on the Traders Lounge tomorrow morning. Did a great Mind of a Trader last night that for pro members we have recorded up on our website right now. But
yeah, I didn't see that. I do want to catch the recording after we're done here. I was going to turn it on. How'd it go?
Well, Slavic is a really smart, nice guy. I mean, that's a pretty good combo when you're teaching people how to trade, what you do. If you're a smart, nice guy. See, I'm a smart guy, but I'm not a nice guy. So I need to work on that second part of it. Because Gino's a smart, nice guy. Noah's a smart, nice guy. Tackle trading has a bunch of smart, nice guys. And as we've
Mark, you can act tough, but you're a smart, nice guy as well.
Oh, go ahead.
Anyway, go ahead with your thought. I don't want to derail you with a pleasantry or a compliment, but go ahead.
And so at Tackle Trading, for our pro members, the content we put out, we're really being able to, because each of us coaches are a little bit different in how we approach. And some of us are fundamentally different in how we approach our own personal investments. And we keep adding and strengthening the diversity of thought and the diversity of trading approaches. And, so I'm able to gravitate more towards oil. Long story short, don't trust war spike rallies in oil. Don't trust war spike rallies on oil as far as short-term trading signals.
So if the market did roll over and broke down, there's still a lot of oil companies that you would still trade to the downside if we got confirmation. Is that right?
Yeah, I actually, because oil's a complicated subject for me right now. I now have cash flow trades going on both the bearish and bullish sides, since I see a lot of sideways movement going on right now. Some of the individual companies are a lot weaker than buying oil itself. I'm a fan of selling puts right now on oil, starting that boomerang classic trade that so many people at Tackle Trading love. We'll continue to do that. I bought some oil yesterday on the inventory numbers. But as some of these individual oil companies have some real problems. And so trading those signals, you'd probably be better off going and trading oil itself than some of the individual oil company components.
Mm-hmm. Yeah, I'm kind of with you on that. I mean, obviously, there's volatility here, so there's always opportunity if you know how to play off of the volatility. I'm going to keep many of them on my watch list, but I'm waiting. It's more of a neutral signal on some of these stocks right now for me, but we'll continue to watch it. As I'm looking across the rest of the market here, give me a quick look at VTR, if you will, Cody. Not a stock I trade very often, but it's one of the top gainers on the S&P 500 today. When a REIT is up 5%, Mark, this is a healthcare REIT, VTR, Victor, Tom, and then Roger.
As fascinating as the
Victor,
Bank of
Tango,
America,
Romeo are the military terms you look for.
I was not in the military. My daughter will know the right terms, Cody, but I did not serve, so I will make up my own words. Mark, 5% on a REIT here today. That's pretty incredible if you think about it. I know the conditions. There's a lot of reasons why these REITs are running here. One of the top gainers being a REIT makes me want to look at XLRE and talk about bond yields. Softening policy out of the Fed is making interest rates drop, and it's making these other areas of the market that bear interest or make payments through dividends much, much more attractive. REITs are continuing to run here, Mark. You've been right on this one all year long. Kind of break this down for our audience out there. Why are REITs so strong in this market condition?
Listen, I am at my nature a pretty conservative investor. I am not the type that goes and trades Netflix or even companies like Apple or Facebook very often. And real estate, ever since Powell pivoted in January, real estate has been one of the easiest calls I've ever made in the markets, because real estate companies, these real estate investment trusts, their primary purpose in the investing community is their high dividend yield. Mm-hmm. Now, when you have a softening interest rate environment, the big money who's looking to park their money, get yield, get return, their version of cash flow, real estate has been increasingly attractive during the course of the year because the dividend yields on real estate investment trust, a nice conservative, boring area of the market, becomes more and more attractive. So when Powell pivots in January to a dovish tone, real estate started taking off. Go put that on a weekly chart, and you're going to see one of the prettier weekly charts you'll ever see during this year. Mm-hmm. I mean, look from where you can see exactly where Powell pivoted in January. Wow. And then you're having, I mean, it is just one of the prettier environments. Nice conservative area where money is gravitated towards, where money has gravitated towards.
Yeah, it's been very, very strong for quite some time. And there's a lot of different reasons. But one of the things, and I think everybody needs to understand this, money is a magnet towards safety and returns, right? It wants the combination of both at all times. When yields in the bond market are dropping, Mark, and money is going to come out of bonds and move towards other areas that are safe. Real estate is one of them. Utilities are another one. XLRE continues in an uptrend here. Been very, very strong. Great call by you. Some of the losers in the market today are actually cruise lines. Give me a quick look at Carnival Cruise Line, CCL. And they did beat earnings and estimates, but then they lowered guidance because of all the different travel restrictions that they're seeing out of Cuba and other areas. And they think that there's going to be weakening demand for this in the back half of the year. Gaps down pretty healthy into support. When CCL gaps down, you're going to see weakness in the other ones here. Norwegian Cruise Lines, NCLH, if you will, real quick, S&P 500 component as well. And you ever been on a cruise, Mark?
I have not. I look forward in coming years to start meandering into my stodgy retirement, play video games, go on cruise years. So,
I've only been on one. I enjoyed it. I enjoyed getting off of that boat.
I think I would enjoy them a lot, actually.
I think you would
they're
too.
Fantastic.
There's a casino. There's great food.
Great food. I love water. Like, water is therapeutic for me. I absolutely like, whether it's a lake, a stream, an ocean, whatever it may be. Water is probably my favorite of the elements. So,
if you've been on a cruise out there, tell me your favorite place to cruise in the chat. I went to Alaska once. The Alaska cruise we went on as a family was incredible. Highly recommend it.
We did a Caribbean one. Advice: spend the extra like $500 up front and just get the all drinks pass. And then you just don't worry about it. Because once you get on that boat and you realize what they charge for those drinks, you're like, oh my God. just spend the money up front and just forget about it.
Just go for it. Well, obviously, cruise lines are down here. RCL as well, the last one. They're actually rotating out on many of them. Maybe you're going to get cheaper prices because of a lack of demand. They're going to drop the price later in the year. Kind of neutral, not much there, but that one was in the earnings here today and did move. Move on to the Dow Jones Industrial Average, if you would. Let's keep moving in through the market.
Quick note on CCL. There might be a short-term trading opportunity.
Back to it, Cody.
All right, so if we get a little play down, let's go to a monthly chart. Anytime I have a chance to bring up grandmama or great grandmama, I'm going to do it. There's the 200 rising monthly down there at about 43.39. Mm-hmm. That might be a short-term trading opportunity that I'm going to look at if we get a little slide. I like playing off the 200 weekly and the 200 monthly. They're some of my favorite trades there are. So.
Well, back on the daily too. And by the way, we're talking about the boomerang trade. The boomerang trade is a very simple concept, but it's a very powerful one. And on a gap down, if you find support and it's a company you're willing to own, I don't mind a naked put post earnings like this at all, Mark. But you have to be willing to own those shares.
You have to be, and that is the key. I've been at tackle trading for going on 2 years now. And, I've been talking about this concept from the very start. When you sell naked puts, which is my primary entry vehicle, you have to ask yourself one question. Am I truly willing to own this? Because what happens to students, and you can nod your head and say, yeah, I'm guilty of that, and put in chat if you're guilty of that, and it's okay. That when price starts going down and moving against you, you get out of the naked put, take a loss because you weren't really willing to own the underlying asset. Mm-hmm. You thought you were. You thought it might be a cute idea, but when price started moving against you, you're like, no, I can't take the pain anymore, or of whatever it may be. You have to be, for the boomerang trade, which is selling a naked put as the first start to a cash flow system on whatever the underlying asset is, whether it's gold, whether it's oil, whether it's an individual company, you have to be able to answer the question, yes, I am willing to own that asset long term.
Well, yeah, we talked about this one yesterday, but Cron, C-R-O-N, quick Cody, I sold a naked put on this one yesterday, Mark, just because I'm like, okay, I'm willing to own it. I know I can turn it into covered calls. I've always wanted to pick up some shares of this company to begin with. I like the fundamentals and the upside potential over the long term, and I like that reversal characteristic.
I love this reversal pattern right here.
Yeah. So I just sold the 15 put, Mark, because if I have to buy it at 15, actually, no, hold on, 14 put. If I have to buy it at 14,
even better.
Yep. I'm like, so what? I'll buy it at $14. It is.
And that's the key. There have been 4 things over the last 5-6 weeks to pro members. I've advocated selling naked put for boomerang style trades. One's been gold. Well, all of those puts expired worthless, mm-hmm. If you got put some gold, which, at some point earlier this year, the biggest problem you have right now is managing those covered calls. You're just going to be happy. You're just going to have to be happy making a little bit of money instead of a whole bunch of money.
I say it all the time, get rich slow. This idea that
go ahead.
It's just mindset. I mean, if you're willing to make small, consistent returns, this stuff can be very, very powerful. If you lever up to try to get too aggressive, it can be very, very dangerous, right? And so just consistency, Mark. We were talking about it before the show started. If people will position size according to risk and really just use the principles in the market that are there, sometimes the markets can feel easy if you're doing it right. It's not supposed to be complex.
All my account does lately is go up in incremental slow batches, because the boomerang trades, I've advocated 4 areas: gold, oil, ExxonMobil, and Intel. Selling puts at certain levels to enter into these. Most of these puts, anyone that listened to me, they're going to expire worthless. Hey, you made a little bit of money. If you got put some of those shares at any point at these support at these levels, once again, you have good problems to have. You made more money. It's just been a really easy environment for the boomerang trade. You know,
And Linda makes a point here. FYI, in an IRA, you cannot sell a naked put. It's not naked, Linda. It's actually what they call a cash secured put. So you can sell a short put, but they make you hold all the money as if you're going to take delivery. So instead of making your returns on margin, Mark, you're making it on the entire amount of cash. But a credit is a credit. If you get $50 credit, whether they hold 200 or 1,200, it is just a credit trade. So you can sell a short put, Linda, just to be aware of that. It's just not called a naked put in an IRA.
You don't get all of the margin. I mean,
yeah.
The return, the annualized return on investment on naked puts in a margin account is pretty sick.
Yeah.
It's pretty sick.
And what you could also do is you could make it a very wide credit spread where you buy, if you sell a put down at 10, you can go buy the 5 and make it a spread to get some of that margin back as well.
Mm-hmm. Yeah, for sure. All good points, all good points. Move on to the Dow. Let's keep working through the stock market here today. Dow Jones Industrial Average did not quite hit the all-time high here, obviously. You still have a print there, 26,966 back there in October. But we are approaching that. We are breaking into a new level here, kind of just fading up 0.5%. It's Thursday, guys. You're heading into a weekend. You've already got the Fed meeting coming through. The Bank of Japan and the Bank of, the European Central Bank, they've already had their news events. What can drive this market between today and tomorrow's close, if anything, besides just price action? Mark, what are you seeing in this chart here on the Dow?
I mean, it's all your broad markets, just rinse and repeat. They've all been moved by the Powell dovish move a couple weeks ago where they all came out and synchronized. They all have the same catalyst right now. The Dow, once again, is a little more susceptible to trade war. So if I was going to do a broad market, whatever, it probably wouldn't be the Dow, because while they've been playing nice for a couple of days, we've seen this with the trade war. Any given day, you could get a negative headline. And the stuff coming out of the Chinese state media is really, really nasty and hardline.
Mm-hmm.
So it's really, really hardline. It's like, we are strong, we are resolved, we'll wait this out, we don't care. Now, whether that's posturing, whether that is meant for the U.S. to see, to say, hey, to get a better deal, I mean, who knows? Who knows?
Yeah.
But negative trade war news would impact the Dow more than it would the other major indexes. So if you're going to make a little play on one of the major indexes, probably S&P 500 or probably a better place to go.
Yeah, there are stocks here that are going to be impacted by any trade news. There's no doubt about it. I do want to talk about some of those companies. First off, and I'm monitoring both chat and watching our screens here. Ilka, I love what you just put in the chat. And guys, we're a team here. We're a tribe. Obviously, we come together and we talk markets all the time just to make sure we've got a mind together, right? We're helping each other.
We should start calling ourselves a tribe more than a team.
I like tribe.
I like tribal. I think that fits the personality of the students and the coaches a lot.
Yeah.
Team's great. It says what it is.
Yeah.
I like tribe.
We'll send Mark out hunting for profits, and Cody, we'll keep you back in the village cooking it up. All right, it is what it is. I don't know what that was there, but Ilka says Tim said it. I was coming to trading to get big gains fast. Instead, I had a slap in the face from the market. Now I've listened to Team Tackle coaches and changed my mindset to get small wins. Guys, process. It's all about the process. And I want everybody to just say, great job, Ilka. I think that's a mindset change that should be celebrated. There's no doubt about it. I'm looking at some of these stocks.
Real quick, Tim, on that, very few traders can actually take that lesson without paying a tuition to learn that lesson. I feel
Correct.
like most traders all hear it and they're like, yeah, I'll follow the process, but I can beat the market. And then everyone gets that tuition has to be paid. And then you're like, all right, I guess I'll listen to what the veterans have been telling me this entire time.
Mm-hmm.
And I really think it's mindset in life too. Like, I don't desire to go buy a nice 5 Series BMW tomorrow. I have a simple life. I just want my money to grow. I don't have all of these things the materialistic things that I want to have. And I think a lot of times that the more materialistic you are as an individual, the more you gravitate towards quick profits, because you want the money and you want to spend stuff. And I can't relate I guess I was a young man, so I guess I can relate on some level. I mean, most of us were there at some point. But if you approach trading and investing from a constant stream, building an account, and the rate in which it occurs, hey, who knows? But as long as it's constant, money adds up.
Yeah.
Money adds up.
Yeah, there's no doubt about it. I'll tell you what else. There's a lot of companies out here grabbing my eye. I do want to run through them. Nike, inverted head and shoulders. We talked about it. Could be trade sensitive news here, Mark. Over time, obviously, you're going to run into risks like that. You got earnings coming up here on Nike here in the middle of June. That'll be one to pay attention to. ExxonMobil and Chevron and some of the energy components on the Dow. Look at Chevron. I mean, just heading towards the high point again. Exxon on inverted head and shoulders. Messy chart. There's no trade there. But it's not bearish either. Oil popping up has brought these companies back up a little bit. CVX real quick, Cody, if you will. And Chevron has been even stronger than Exxon here. I mean, it's back above its moving averages and heading towards the high point. You know, I'm seeing reversal characteristics out of some things that were weak, Mark, and I'm seeing strength out of the regular stuff that's been strong. Procter & Gamble is looking pretty good here today. PG hitting into a new high point. As I look at the Dow, I mean, there are individual components here that are in play, in my opinion. There is some trade risk, but it is what it is. Let's move on to the NASDAQ, if you will. NASDAQ 100.
All these consumer staple companies, I literally, we are going to have a conversation, whether it's 3, 4, 6 months, and we're going to be like, look at all these great bearish patterns on consumer staples.
Yeah.
Like it's just things are, I mean, because once again, it's yield. And that's why.
Well, they pay dividends. I mean, even utilities. I mean, anything that's going to pay a dividend.
Rotation.
But at some point, those yields do not become attractive, and the valuations becomes out of whack.
Mm-hmm.
Like that's why, like the boomerang trade, when things are beat up, go back to Procter & Gamble. And this is the thing: when you're looking for yield, when you're looking to add these companies, like adding them at all-time highs. I mean, there are better things to trade. But I mean, how many people were excited to add Procter & Gamble at $80 when it was forming a reversal back then? Not as many. But that was when you go for these type of companies.
Right.
Is when, on these deep pullbacks, on these situations where they get put in. This is when value investors, this is when people looking for great yield, this is when they start adding. They don't add at the top of the chart.
Mm-hmm.
And if you're going to trade a high base breakout, there's lots of things going on. Go find one of those.
Yeah, there's no doubt about it. As I look across the NASDAQ here, I mean, not as many charts that are as strong as that PG chart, I'll tell you. I mean, we have real estate and a lot of the staples, utilities have been really, really good. Move on to NQ, though, real quick, if you will, Cody. And let's break this one down. Has a little bit more upside to even get to the high point here, but now you've been up 1, 2, 3, 4, 5, 6 candles in a row, and pretty much for about the entire month of June here on this V-shaped recovery, Mark. That was a clear breakout 3 days ago in front of the Fed on the ECB news. Now we ran post-Fed, and now we're up here intraday, just kind of fading higher. You know, I know that candle's not great. Let's read this chart if we can here, Mark. What should we be paying attention to?
I mean, this is where, like, when aggressive traders looking to play those nice technical patterns, they go to areas that can have some really nice, huge returns, and technology has been stellar in the last couple weeks. So once you get past, if you treated the Fed announcement like earnings, and let's just call it earnings for the entire stock market, applying your rules post earnings is probably a smart idea in the market as a whole right now, especially when analyzing broad indexes. How do you trade post earnings? What are the strategies? How do you approach that? And I know for me, I usually like to wait 3 days post earnings, get a sense of where that chart is, because all kinds of nonsense can happen in those few days. Willing to miss out post earnings to get an ideal formation, an ideal technical setup. So give her a couple of days, see what she looks like.
You know, I was talking about Cron a few minutes ago. Look at Tilray real quick, Cody. I'm looking across NASDAQ strength. It's up 3% today, and it's finally actually showing me some reversal characteristics. Mark, you've got a higher pivot, and now you're about to break above 50. If you break above 50, is there enough there to call that a reversal, or is there too much pressure with those falling moving averages over time?
Let me go look at the weekly chart here. Let me go look at the weekly chart here. I would love my favorite trading signal in this situation. It takes a little bit of time to develop. It's getting above the 20 weekly, and you still got a ways to go for that. That 20 weekly is very powerful. Now, you do have a nice $10 distance between where price is right now and that 20 weekly. So I do think that there is some room to run. You got a little gap. When you have these moving average gaps, I have no problem, would never say a negative word about someone trying to play a quick reversal as long as you're targeting price at that 20 weekly or a little bit below. Don't try to bet that it's just going to go shoot through that, because the computers will slap you down really hard and teach you a valuable lesson. There might be some room to run between now and then. Hey, listen, when marijuana gets hot again, because it will, there's some, for those people that do want to buy that BMW 5 or 7 series, this is the type of thing that can move really, really quickly and can have huge runs, because it's kind of been out of vogue the last few months. But it will be hot again.
It was out of vogue for most this year, actually, as other things were running. I mean, the marijuana stocks were all beaten down, and Cron finally turned over, and Tilray actually showed me some interesting characteristics. Needs some more confirmation, needs some more developing, but potentially a reversal watch list add there. Let's move on to some of the bearish stuff here. And I'm looking, there's not a lot of weak companies, but here's a good one. CLVS, Clovis Oncology. It's a small company. Bearish retracement pivot confirmation here. Trades a lot of shares, only $15 a share. Mark, when a biotech company is going down and you don't know it, and you don't know how many drugs they have on the market and all the news, do you go with the old adage, don't do drugs and just avoid them? Do you trade these kind of companies?
You know how many small cap and mid cap biotech and pharmaceutical companies that are publicly traded? What is it, like 400, 450? Like, it is a massive amount of small bio. I don't have the brain power, and I don't like the volatility, to keep up on those. It's just, listen, if you have a passion in this area and understand the science behind it, which I don't, then, I could, then go for it. Like, trade what you know, invest in what you know. I'm a big advocate of that. I just don't know enough about the science and the trials. Chart's ugly, though, from a technical perspective.
It's definitely ugly. We've got other ugly charts here. I mean, if you're thinking the market may be overcooked to the upside and you're looking for something on the downside, there are some candidates. I'll give you one right now, Tesla. Tesla is one of the most popular tradable companies out there. Cody, you were talking about this pre-show. Cody, you read this one for me, if you can. Give me a look at what you're seeing.
Well, I'm gonna leave the fib on here real quick, because I did a fib extension all the way from the top to the bottom, and it's retracing right into that 23.6 range, which is also the 50-day moving average.
I like that double band. I like it when fibs line up with a moving average. When those key fib levels line up with a moving average, that is a really powerful 1-2 punch.
I'm getting excited about this short, because then I can also draw a nice line right there at the previous lower low, which now it's a lower high. Like, 3 things lining up like that. This, to me, the stars are telling me to short Tesla.
You got one thing working against you, though. What is it?
20.
Mark's girlfriend.
You want to look at that one?
What's acting as support the last week?
The 9.
The 9. You got a pinch situation developing on Tesla. A break.
What about a straddle?
Except options are like insanely, like straddles on Tesla are not a joke.
Well, the IV rank, we're only at 27%. I know that volatility.
Is that all right now?
Well, 27%, I think, of its yearly range. Go to the trade tab real quick here, Cody.
It is a beautiful setup for a straddle.
Yeah, technically, because you're going to move and you've got earnings 6 weeks out. This could be a good positive Vega trade here.
Yeah, if you're at that low of IV on Tesla right now,
Mm-hmm.
and you have that formation, you got my attention.
Or if you want to scrap the volatility out of it, you can do what's called a debit condor. The old debicon. Coach Gino talks about him in the lounge. In the chat, type in the word debicon, Debicon. There are ways you can play this positive Vega. Cody, I want you to put it in the notes. Let's come back to this one tomorrow, and let's build the debicon. Friday fun day. Let's have some fun and do a bi-directional Vega trade here on Tesla. Because to me, technically, it's in the middle. You know, you've got some acting as support. The market has been strong. I don't think it's going to stay at 220 for the next month and a half.
You got that Fibonacci level. You have the old support acting as resistance, and you have that 50-day falling moving average. You got a rising 9. That is a beautiful, and with volatility where it's at, listen, I don't Vega trade often, but I know a great Vega trade when I see one. And that's set up really, really nicely.
Yeah.
That's set up really nicely.
Well, and then the volatility cycle as well. At the end of July, we're about 6 weeks out until earnings, and so usually the Vega will start to pick up and run.
I mean, you could have a situation, especially if you do it right, where Vega alone. I mean, that was the key to my huge Micron trade last year.
Mm-hmm.
Was benefited from Vega. It ended up being a Vega trade and was my best trade of the year last year. That's a beautiful setup.
I kind of like it. Markets are recovering here intraday as we're rolling back around. There's quite a few companies grabbing my attention. Move on to the Russell, if you would, Cody. And let's talk about RTY. Neutral. The rut has been neutral. You're now post-Fed, Mark. You talked about this on the podcast and then Monday when you were here in the halftime report, how you would probably wait to do condors on RUT if you're a condor trader until after the Fed announcement. Is there anything now that
I think the phrase I used is you'd be an idiot if you did them before.
That's right.
If we want to go back in history and be precise about what I said. And it's just like, let the run happen, whatever direction it happens, and then get in your condor trade. So, you know, you had the Fed meeting, you had a nice little explosion over the last few days. It's just getting the best price you can. Just getting the best price you can. The situation's really, really nice for a condor. The backdrop, the fundamental backdrop, according to me, really, really nice. All I was saying on Monday is just wait for that little big move, one direction or another, and then get in.
You know, the big thing probably with
these condor. I might do my second condor ever.
Yeah, I know you're not a huge Iron Condor fan. I love them. I love the fact that you actually get both sides of them. And for one margin cost, so you're kind of doubling up on that. Some of the characteristics I really like. RUT, Condor.
I'm going to put my second Condor trade on ever.
Are you doing that right now? Is that why you got quiet as your voice trails off?
I can't multitask. You people that can walk and chew gum at the same time, I envy you. You are magnificent human beings. I cannot. I can do one thing. I try to do it well, but I cannot do two things at once.
Most people cannot.
Try to day trade, look up draft picks, and check.
No, I can only do one thing at a time. And most of the time, I don't even do that very well unless it's in the world of probability analysis.
Move on to the dollar, then commodities. We got a lot to get through, and I do want to do some condor stuff by the end of the show. We might build one here on a Theta Thursday. And by the way, welcome out, everybody. You know, part of the halftime report is for us to come together and talk ideas and get you guys in here. If you ever have a request, if you're a pro member, shoot us an email, team@tackletrading.com. If you're not a pro member and you'd like to be a pro member, shoot us an email and Mark can help you get set up if you don't know how. There's always a link in the chat and in the comments below that you can sign up for a 15-day trial. The dollar's down here, guys. I mean, obviously, with the Fed doing what they're doing, dollar is taking it right on the chin. A break below 96.50 from a technical perspective would be ugly for this chart. You mean, is this an overreaction? Is it a proper reaction? Mark, what's your take?
Listen, I wanted to do a boomerang style trade on the dollar, and I thought the Australian dollar setup a couple weeks ago was one of the prettiest setups I had seen. I remember talking, I was like, everybody should, in our Friday meeting, you remember when I said that's what everyone should do this week when you had that retracement back up into those falling moving averages on the thing, and then having it and shorting it. Here's what convinced me. My brother Matt and your brother Matt convinced me not to do a boomerang trade on the dollar. And his logic behind it, because the fundamentals, like my basic analysis is that, hey, other currencies are terrible. Other currencies are terrible. And at some point, the dollar is going to become attractive. Yes, the news is going to drive it down. And I was really excited to build that. But Matt talked about institutions, if you got some short-term volatility on the dollar, unwinding their institutional carry trades. And I could see that happen. And when you have institutions move out of a certain, whatever it is, one of their specialized trades, you can see huge movement down. So I'm still interested in the dollar. The level in which I'm interested now is much, much lower after hearing Matt's analysis. I think he was talking about it on the Trading Justice podcast this week. You know, about institutions, if they unwind their carry trade, their massive, carry trades, that could create this like huge wave downward. So I would like to see that huge wave downward before getting back into the dollar, which I think would be really, really good, especially against things like the Australian dollar, some of the weaker currencies.
Cody, I'm going to drop a couple links in the chat. I'm going to do a little teaching right here and explain what Mark is talking about. I just barely put in one for the treasury yields. Dollar's down because of what the Fed did, here, Mark. And you can actually track every yield from the U.S. Treasury. Now, when you hear this reported in the news, bonds are up, yields are down. It can be confusing when you're new. In the Zoom chat, Cody, I gave you the link for the treasury.gov resource center that tracks all of the different treasury yields. Let me know if you can.
Yeah, I opened it. I just have to reshare to where you can see my entire screen, not just the tackle window. And from there, I'll turn off the sound in case there's any ads that pop up. All right, we got the Treasury website.
Now, all the way down on the bottom, I want you to look at this. Now, this is tracking just the month of June, Mark, and that's just a lot of numbers, but you love numbers. You're a data set guy. Look at the 10-year yield, okay? In the last 5 days alone, it's gone from 210 to 29 to 29 to 28 to 203. 5 basis points overnight in the 10-year yield is huge, Mark.
Yeah,
yields are coming down. I mean, you're seeing it over time across many of the different, curves. Look at the 2-year yield. This one's incredible. It dropped 12 basis points from yesterday until today. I mean, you want to talk about people moving towards different, interest-bearing products. This is why, guys, institutions aren't making as much yield from these guaranteed bond yields right now.
This chart, and this is the thing, and I know if you're new, this can be like, it's not as exciting as talking about Beyond Meat. I get it. I do. But this is the core. When you understand these basic concepts, when you hear me write, or like I've written 2 theses on gold this year. And I understand that like sometimes for a new trader, you're like, oh, that seems boring. It makes you money when you understand this stuff, because it gives you the confidence to say, I don't care that gold's. How many times did you hear me say, I don't care that gold's going down, I want to buy more in the months of February and March and April? People got sick of it and they're like, well, I'm going to. Understanding how yields and how these big institution works gives you the confidence in your investing thesis and allows you to do things that, hey, where's gold today? Where's gold today? It's because of these aspects. When you have these lowering yields, I mean, right now we have an inverted yield curve, if I'm reading that chart right, on the classic 3-month, 10-year.
3-month, 10-year, yes.
I mean, that's not a great sign. This is why I'm not loading up on equities. I'll trade equities. I'll day trade anything. I don't care what the market conditions. If I break through resistance on a thing, but that chart right there is not pretty for the health of the economy. The bond market's saying, stock market, you're insane, is what the bond market is saying.
Well, and then you have the interest markets out of currencies as well, which we're talking about the U.S. dollar. The American Fed currently is doing a 2.25 to 2.5 current rate. They last raised it in 12/19. This is a website called globalrates.com, which shows you all the central bank rates around the world. Now, what Matt was talking about and Mark was talking about, as the Fed lowers interest rates from 2.25 to 2 to 1.75, Mark, those yields are going to be less attractive as well. And money's going to continue to be pushed into stocks and commodities like gold and oil and those other things. It's a big, broad topic we call intermarket analysis. Somebody in the chat type in intermarket analysis. And this is why on the weekend, we always go through the commodity and the currencies and every other thing in those reports. A lot of our traders, Mark, they skip right to the options report because they want to just go get the picks. But you got to understand how currencies work and how commodities work because it is what drives the market, don't you think?
Hey, and if you don't want to learn any of that, guess what? On the commodity report every weekend, now I've had terrible luck on printing theses for oil and gold because immediately the next week it went down both times. I have extremely bullish cases on gold and oil. Not at this price level for gold. But if you don't want to learn this, next time I say, hey, let's get some gold, because you don't hear me today saying I want to buy more gold. You know, I want to buy more gold today. You know, I'm going to lose all my gold. Now, I'm going to hope that gold pulls back at some point in the next month. I'll be patient, you know. I'll be patient, and if I just lose out and gold goes to $1 billion, hey, oh well, I'll go find something else where there's an opportunity.
Yeah. You know, the BOJ did have their event last night. They don't hardly pay any interest, but if with this idea that we're going to unwind that carry trade, dollar down, yen up, and the commodities are attractive, there's no question. Let's keep moving through the markets here, Cody, and let's go back into charts and look at crude oil. Crude oil, W breakout back to the high side, but now you're at a falling pivot. You've got all kinds of mixed action in this chart. Mark, I believe you're neutral at this point. What's your read on the chart?
All right. So I'm going to be talking about a double boomerang trade on oil this weekend in the commodities report. I'm not going to go into length in it here. I'm going to save that for our pro members. I advocated a boomerang style trade. That put is going to expire worthless tomorrow on oil. I'm going to do a double boomerang on oil in this weekend's commodities report. I still advocate buying at lower levels, but I'm going to talk about a Mark Justice double boomerang special, something that nobody at Tackle Trading's ever seen before. So check out the commodities report this weekend. I will lay out my case for oil. Once again, I am neutral at this price level, which creates a double boomerang opportunity. And I love the annualized rate of return on oil with boomerang trades. I'm so happy all of you other coaches are here at Tackle Trading. I'm getting back to what I love: gold, oil, silver, and finding a great company like Coca-Cola or Intel when it's beat up.
Do you have any, I know that you track politics and global issues, obviously. Do you have any concern about what Iran's doing right now?
With commodities.
Yeah.
Like you have to be in tune with currency and global. I love it. I'm the happiest I've been in so long. This is Terrific Thursday. You are right. This is Terrific Thursday.
Terrific Thursday, unless you are a drone from the U.S. over the Strait of Hormuz. I think that's how you say that. It got shot down by Iran last night. Mark, did you see that?
I did. Anyone trying to predict, because you know when we're in trading, and especially how I do it, you're in a probability business. I have been my whole life. I don't know when global parties, as a general rule, I will place bets that tension gets resolved, whatever it is. Anyone, whether it's trade war, whether it's this, whether it's that. You know, one day we will see something like the financial institutions, something on the level of 2008 or 2009, where there is literal systematic risk of the entire system collapsing. Eventually it will happen again. I don't know what form it will take, but you know, it would be, but as far as war, as far as Middle East conflicts, betting that full-on war will break out usually isn't a smart bet, because how many times have you seen Middle East tensions and conflicts arise over the last 10, 11, 12 years? And have that actually lead to anything?
So to add to that, because I think the media is just getting way out of hand trying to spark headlines. Before President Trump took office, he's always been an isolationist. He's always been against intervention in wars and things like that. So why all of a sudden, when this is happening, do they think that he's just going to become an all-out war hawk and jump into it?
Let's talk about this because this has ramifications. This does have ramifications.
It does, because they can't continue to poke the bear and not expect to have something happen. I mean, Iran's a pinprick compared to our military.
If you try to short oil and it does happen to be a full-blown war, you're going to lose some money. And you could lose a chunk of money depending on what instrument you're shorting. The one thing that gives me hesitancy to my natural everything resolves itself line of thinking is that the actors surrounding Trump are very, very big war hawks. And Pompeo, Bolton, these individuals aren't afraid to kill people to advance their geopolitical desire.
Correct.
And so because the people in Trump's ear right now are disgusting human beings, in my view, trying to further whatever geopolitical causes at the expense of life, I don't put it above them to manufacture an issue as a cause for war. Now, are the American people going to get behind a war with Iran because they shot down a drone?
No.
They're going to need something else than shooting.
But you know what I think people would be behind if they keep, placing mines and shooting down drones and things. If we have another what Trump did to Syria when they, attacked, and he just said, okay, shot all those Tomahawk missiles and just annihilated one of their airports. It's like, if we did something like that to Iran, look, don't mess with us.
Listen, Iran is a bad actor. I generally support the hardline rhetoric that Trump has had. Once again, when
all our wars, people aren't going to agree with. But a retaliatory disciplinary strike, hey, quit acting up, stop, go away. I think people would be okay.
Volatility in oil right now, when I checked USO before we were coming here, it was rocking at 40%. Volatility is really, really high on oil, which means you get bigger premiums for things out of the money, which from a trading point of view is really, really nice. Really, really nice. I like those
44 on the IV for USO right now.
Yeah, I mean, volatility will spike in oil when you have these type of situations arise.
I don't want anything to obviously happen in that area from a conflict perspective. I don't think anybody would ever root for that. But if Iran keeps poking their nose where they're not supposed to and making bad decisions about how they're approaching this, it could get worse and it could spiral out of control. I do not expect that in the short term, but it's obviously one of the reasons why there's volatility in oil. There's no doubt about it.
And it has ramifications. I mean, depending on a conflict, I mean, what's LMT doing today? What are your defense companies doing today?
Yeah, Lockheed, Northrop Grumman, those types.
Looking at a breakout is what it's doing.
Now, that's been a strong chart even before this. But you see, and it's very natural, when these type of headlines, these companies become very, very strong. That was a strong chart heading into this.
Breakout pullback, looking at a second break.
It's kind of a pretty chart from a technical perspective with a potential catalyst behind it. It doesn't need conflict to break out and be a profitable trade.
Correct. Yeah. All right. Keep working through the markets. We only got a few minutes left here, and I do want to talk about condors tonight. We're not going to prep one right here, Cody. I'll do it during the cash flow club tonight, but there's a few other markets we got to talk about. Look at gold. I mean, we literally should have led with this one. Gold went up and touched almost to 1397.7 here, Mark, breaking to a high side. Extreme run in the short term. If you're an investor, you're probably not locking in profit. But if you're a trader, do you click that button here today, or do you continue?
I don't approach gold from a trading point of view.
I will not be clicking any buttons on gold right now.
Listen, gold's getting a double spike because everything we just talked about above the war, when you have a world event occur, what happens to gold on that day? Almost every time
it goes up.
It goes a huge spike up. You also have the follow through from the dollar. I mean, you have the follow through on the Fed. You got a double catalyst going on gold right now, which creates the run up. I'm just hoping gold pulls back, that somehow the dollar listen, I'm not buying at this level. This is not like, see, in April, even though in March, in February, I was like, buy more gold, buy more gold. My analysis right now on gold, it's left the realm of rational value analysis.
Mm-hmm.
We are in parabolic, event-driven hysteria.
Correct.
I don't act in those time frames. If I own something, getting in at lower levels, hey, great, I'll manage it. Like I've rolled calls out. I've tried to manage it as best I can to maximize the money I can make on existing gold investments. But when you're in hysteria based on a double catalyst, I just hope for a pullback. And if I don't get it, I don't get it. Once again, I'll move on to something else.
Yeah. Silver actually is moving as well. A lot of the metals are. Take a quick peek at SI, if you will, Cody, when you get back here. I know.
What's that?
Silver, real quick, just quick peek at silver chart. I liked the breakout on this reversal signal as it was running here, Mark. Now you've already run in one candlestick. Silver could trend here, though, if we do continue to have some of the same dynamics. Just keep an eye on it if you're out there, guys. Other commodities, you're not getting the same movement out of the other ones. Platinum, copper, and palladium, they're all kind of flat. Even palladium's down here today. As I look across the rest of the market, guys, there's all kinds of individual things happening, but quite frankly, it's just where we are here today. Bitcoin, last one. We got to take a peek at this Bitcoin chart.
Oh, do we have to, though?
We do. As a matter of fact, 94.15, Mark, trade's running.
Did you get stopped out?
I did not.
Because that support level held. Because technical analysis is a beautiful thing. Tim was that intraday support level, Tim was going to get out if it broke. Guess what? It didn't. Whether it is technical analysis or fundamental analysis, whatever you use to guide your decision-making process saves yourself from, oh, it's going down today, I need to get out because price is moving against me. Tim had a support level. He identified this is step system 101. Step system 101 on when you get stopped out relies on horizontal support. Tim applied that in his real life trading, and right now he's looking at Bitcoin chart, being very happy. Possibilities.
Listen, it's not exactly a huge trade. When I do like it though, and I like the upside potential here. I got a $10,000 target just in a short term trade. Needs about $600 to get there. If the dollar keeps fading, I think Bitcoin could.
And one thing I know, because everyone has heard me say sell a put on gold. I literally, since I can't remember the last time I've not said sell a put on gold. If you don't know what to do, sell a put on gold. This is the first time in literally like 8 months that I'm saying wait. Wait. Like, don't sell a put on gold. Wait. So for those people that have not got into gold, my advice is to wait.
But you could take profits on your puts on gold right now.
Yeah, that's true, but that's not why he's holding it. Obviously, he doesn't approach it from a trading perspective. Quick look at Work, WORK. We use Slack every day. Slack went public, Mark. It's a great company, and I think that they've got good potential here. IPO, they IPO'd down here about 36. Their listing price was a lot lower. It's running like these IPOs have this year. Just add it to a long-term watch list.
Here's the thing. Pull up Zoom. I'm a simple guy. I'm not advanced. I love products that I think are great products. Zoom is a great product.
If that thing breaks out.
Slack is a great product. Great real life products. Charts can tell us some things, but I love getting at the fundamentals and really understanding a company. And when I love their companies, when I love the product of a company, I really like diving deeper and let's investigate this company a little further. Let's follow this company a little closer. And Slack, which you said, what is it? Work?
Work, WORK.
What a great ticker symbol.
Seriously, what a great,
ticker symbol. We use Slack. That is how we all communicate at Tackle Trading with one another. Yeah. We communicate on Slack. We communicate on Slack, and it's a great product. Easy to use, functional.
It is. It's a really good product. So is Zoom. And you are 100% right, Mark. We've all been doing consumer research our whole lives. Pay attention to what you're using out there in the marketplace and what you're enjoying. A lot of times those companies are going to perform well. Right now, Work is IPOing here today. Obviously, we at Tackle Trading, we don't usually chase IPOs. That's not the way we approach it. But add it to a watch list. The NBA draft is tonight as well. I always.
Hey, how about our Utah Jazz trading for Mike Conley?
I saw that. Dude, I'm a huge Jazz fan. I know
I'm a huge bandwagon Jazz fan.
Yeah.
They're my Utah Jazz now.
That's right. Right. And tomorrow is the official start of summer, which makes me think of summer movies, Mark. Did you know in this year, or in this day, 1975, Jaws was released? Maybe the biggest summer movie of all time.
What a classic.
What a classic. I don't know if they make them as good as that anymore. I actually watched that earlier this year. It still holds up, by the way. It's incredible.
Absolutely, 100%.
100%. Anything we missed here, Cody? Tonight, I'm teaching Cash Flow Club, guys. And so in the chat here, just make sure we're all on the same page. Cash Flow Club tonight at 8:30 Eastern. Just put in iron condors. I'm going to be going through the iron condor research. And I actually got about 5 companies, Mark, I like. Salesforce, Netflix, Broadcom, Allergen, and DocuSign that are all neutral charts. I'm going to run the numbers on them. Cody, did we miss anything here, kid?
The only thing I have, of course, we talked about AMD being the stock of the week, and looks like Foot Locker is one that won. I mentioned that yesterday. That's all I got.
Couple other companies on the option report triggering here today. Travelers, Philip Morris. Go check out that option report. We're going to have new bird dog picks for you tomorrow and over the weekend. We publish them on Saturday.
And my final thought is if general market conditions, once again, caveat being trade war doesn't escalate to ridiculous levels like we did a month ago, you could see some generally bullish neutral conditions, which is really going to make this a really nice stock pickers market coming up.
I agree.
I mean, it's kind of convenient that we ran up off of all the news on trade going well, and trade's not going so well. Market comes down, hey, Fed, you better fix this. Fed gives us good news, and oh, wait, G20's next week. Good news out of trade.
Mm-hmm.
That's me thinking there's a little bit of
that trade war
nefarious.
It's what it is, and that's why once again I want to go too crazy, but it is, excuse me, it is setting up to be a nice stock pickers market over the summer. It really could be.
And remember, a programming note, tomorrow is Friday Fun Day. And Mark, we're going to have some fun because we're going to build that Vega trade on Tesla. And I think that actually will be fun because it's got the potential to be a profitable trade. We're going to look deeper into that tomorrow. Guys, if you're watching our channel, always like and comment. Even if you're watching the replay, it's great to see those comments coming in. We appreciate you guys being here. We'll see you tomorrow.
Take care.